Hey guys, Chris here, the Young Mentor. Before we get into the content and training, I just want to let you know real quick, it's important to know why we're talking about real estate over any other type of investment. Definitely not saying to avoid other types because it's good to diversify your portfolio. I'm just going to explain why real estate is the best option and the benefits that it contains, and my personal favorite is that it's recession-proof. Before we get started real quick, I just want to let you know I'm not selling any classes or courses or trainings or coaching or anything like that. Everything that we do here is going to be free. I've personally spent thousands of dollars and hours on coaching and training. You can see behind me, I've got books and ebooks and DVDs and CDs and flash drives, and I've done webinars and everything from all the coaches and mentors and gurus out there. A lot of things you need to watch for, and I'll do a webinar on what to look for in a coach and a mentor. A lot of them will say a good metaphor from baseball. They'll tell you about grand slams and home runs and how great it can be and triple plays and all the things that can happen. And then they'll tell you there's strikes and balls. And if you get 4 of them, you get a free walk. And there's different bases and don't get tagged. And that's about it. Oh, here's a golf club, now go and do it. And they don't really tell you, well, you can't use that golf club. You really need a baseball bat. And they don't tell you anything about how to play the field. And there's an outfield and infield, and there's so much more that you need to know. But that's an extra $10,000 to have a one-on-one coaching session. And there's so much of that out there where they only tell you what you need, or it's information overload, and it's not everything that you need to be able to get started and to be successful. So I'm kind of here to bridge that gap, not discrediting coaching and gurus. Like I said, I personally pay thousands of dollars a month to have a coach. I've got mentors that I go to, and we can bounce ideas off each other. I'm part of a mastermind group that's based out of California, and we bounce ideas off each other every week and talk about different changes in the markets and how we can overcome certain challenges, and we talk about all kinds of stuff. As I'm sure you know, 90% of millionaires have become wealthy through real estate. That includes people like Warren Buffett, Donald Trump. Even Forbes says real estate builds wealth more consistently than any other asset class. Personally, I started in 2008. As you know, that was when the U.S. had that recession. There was a number of reasons why, but that was the main reason why I switched into real estate, because I found out that real estate investing was recession-proof. Well, what do I mean by recession-proof? How can anything be recession-proof? Well, just because the value of the dollar has dropped, or gold, or silver, or whatever financial hardships of the time may be, does not mean that somebody doesn't want a roof over their head. Even if the US dollar became completely worthless and you've got rental properties, you can still barter for a box of cucumbers or a crate of goats or whatever to offset that. If you've got $100 million worth of cryptocurrency or stocks or bonds or just money in the bank, and that becomes worthless, you've lost everything, which happened to a lot of people during that time. But if you've got $100 million worth of real estate, you have a tangible asset that you can still continue to make a passive income on and afford a living with. Now, if that sounds far-fetched, it's not. A quick history lesson you may already know. In 1914, the exchange rate of the German mark to the American dollar was about 4.2 to 1. 9 years later, it was 4.2 trillion German marks to 1 US dollar. This inflation began during World War I, when the German government was rapidly printing currency and borrowing money to finance the military. Workers brought wheelbarrows and suitcases to work to collect their wages. There's even one story where a distracted worker found that his suitcase was stolen, but the money was dumped out and left behind. The suitcase was literally worth more to the thief empty than crammed full of money. So that being said, a lot of people chose to avoid currency altogether during that time, and they placed their faith into tangible assets. While we're on the topic of inflation, did you know that the inflation rate in the USA today is 2.5%? In 2007, when we were going through the bank crisis, when I started investing, it was at 4%. And the reason that got me into it is my savings account was not making 4%. And I doubt yours is too. It's probably getting maybe 0.5 if you're lucky. I looked at my credit union savings account right before I shot this video, and I'm getting a whopping 0.15%. Now, I did find out if I get a CD, certificate of deposit, for $100,000, and I leave it in there for 72 months, I can almost get 3%. But I can't touch it for 6 years. At that rate, you're not even keeping up with inflation. So you're basically losing money. You're kind of mitigating the risk. It's better than if you had it in a coffee can on your fridge or stuffed in your mattress. But at that point, you might as well go into stocks or bonds or something and actually get something out of it, right? Well, what about stocks and bonds? We're talking about real estate. Well, stocks and bonds both yield about 2%. So, better than the 0.15. But I just did a real estate deal last month and made 28% in 2 months. And it cost me less than $100,000. As a matter of fact, we bought property for $60,000. That was all in. That included getting it set up, getting all the papers filed, getting the insurance binders in place, and the rehab work. And we sold it for $135,000. So I made $70,000 in 2 months, 28% profit, and it cost me less than $100,000. And I was in and out. And that's another point that brings me to, with real estate, you can generate significant income without having to sell your shares. So with stocks and bonds and cryptocurrency, you just have to put your money in there, hope that the price goes up, and then sell it. Where with real estate, if we hadn't sold that deal, or if I didn't want to, I could rent it out for $2,000 a month and have residual passive income for doing no work, keep that money coming in. But then whenever I did decide to sell it, I could, and cash out again on the same deal. Real estate also naturally keeps the pace with inflation, and inflation can even increase the value of real estate. It reduces the burden of a mortgage over time, and for those reasons, a lot of people use real estate to hedge that possibility of inflation. And inflation generally is going to hurt other investments like stocks, bonds, and crypto. It's also more difficult to be defrauded in a real estate situation compared to stocks or bonds or cryptocurrency. You can do your homework, you can physically go and look at the property, you can have people send you pictures of it, you can have home inspections done, you can do background checks on your tenants, you can talk to the city, you can talk to realtors, you can talk to people about it before you buy it. You can even do the repairs yourself. Or with stocks and bonds, you don't really have that. You have to trust the management and the auditors and hope that everything works out. And according to the National Association of Realtors, since 1968, the real estate has appreciated 6% every year, and that includes 2007 during the economic downturn. Real estate investors also can enjoy a lot of tax benefits that other investments simply don't have access to. A few of those are things like you can write off interest paid on mortgage, depreciation on the property taxes, insurance, repairs and maintenance, business-related travel costs. There are ways to avoid losing money in real estates on taxes for sending money to the IRS, which we all can get on board with. For example, if you sell a property, you can defer that capital gains tax by doing what's called a 1031 tax exchange. And we'll get into that in a future video, where basically you just keep that money tied into properties and you never have to pay the taxes on it until you finally cash out at the end. As you know, more deductions is more positive cash flow for you and less for the IRS. When you pass away, your heirs can, when they inherit the property, they can do that without having to pay any of the appreciation tax that occurred during your lifetime. Getting started as a real estate investor is not as difficult as everyone makes it sound. It's not like it is on TV. You don't have to have hundreds of thousands of dollars to get started and make your first investment. Actually, in my next video, I'll show you how to wholesale deals. And that's where you just find a deal and then it costs none of your own money. And then you just, what they call, assign that deal to another investor who's looking for a deal in that property. I work with wholesalers all the time. I love them. I don't have time to go out and look for properties. But if you can find me a deal where I'm going to make 60 grand, I don't mind giving you 5 grand for me to make 60. Duh. And then you made 5 grand having to do no work, and it costs you no money. Typical wholesale deal can net you anywhere from $1,000 to $10,000, depending on the deal and the type of location it is. A lot of people get into real estate to retire early or quit their JOB, which, if you didn't know, is an acronym for just over broke, right? And a lot of people want to bring their spouse home, or buy a new car, buy a new boat, buy a bigger house, whatever your financial situation may be. Care for your parents, care for your kids, send your kids to college, whatever you have that's driving you to get that extra income, or just have extra play income. I like to take a month-long vacation every year. It's great. I can leave, go to Florida for a year. We're going to South Carolina this year for a whole month, just because we can. And I know when I used to work my full-time job, that was not an option for me. If you want to jump straight into owning rentals or flipping properties, there's a low barrier to entry there too. If you have, say, $100,000, for example, and you wanted to buy $100,000 worth of stocks or bonds or cryptocurrency or whatever, you need to use all $100,000 for that. If you want to buy a $100,000 house, you can do a 20% down payment and get a mortgage and finance the rest. So you can have $100,000 worth of investment for only 20%, $20,000 down. If you can't get a mortgage, there's other options. There's non-recourse loans, hard money, private money. You can use other people's money, and I'll show you how to do that. You can get personal loans. And a lot of people don't know you can actually hold up to 5 mortgages at a time. So being able to understand those financing options is critical to making the most of your investment opportunities. So with an affordable entry point, little to no barrier to entry for investing in real estate, it's a good potential way for growth and to diversify your portfolio. And I'll show you ways how to maximize your returns and leverage things like property management, growth mindset, emotional IQ, asset protection, out-of-state investing, HELOCs, FSBOs, FLPs, yellow letters, driving for dollars, leveraging your IRA or 401k, how much earnest money you need, house hacking, which is where you buy a duplex, you live in one side and you rent out the other side, and then the money from the rent covers your mortgage, and then once that's paid off, now you own the whole thing. You can rent out the other side, sell it, rent both sides, buy a new house, fix and flips, risk mitigation, LLCs, C Corps, S Corps, umbrella corps, and my favorite, getting other people to lend you money for a rate much lower than the banks. Why would somebody do that, you might ask? Because you're going to give them a better rate than they're currently getting. There's that 1.5%, that 3% we were talking about before. And those are great for people like doctors and lawyers, people that have a lot of money but don't know what to do with it, don't know where to start, want to invest but don't know how or where. So you can show them in real estate, hey, give me 70 grand, I'll buy this house, I'll flip it and sell it, I'll give you 6%. Now you're making 28 minus 6, so you made 22%. It didn't cost you anything. They're happy, they're doubling theirs, and you're happy too. It's win-win. If you don't know what some of that or any of that means, then you're definitely in the right place, because I'm going to be covering all those topics and many more in the following weeks. And we'll show you different ways to start or modify your current investing situation and what suits your style, personality, goals, and your current financial situation to be able to maximize everything. All right, guys, let me know what you think. I'll respond to the first 1,000 comments on this one. Also, make sure to hit the like button if you learned something. And if you haven't already, subscribe with notifications on so you don't miss the next free training video. Thanks.